Good morning. It's Vijay here. Today is Monday, 7th July 2025. Welcome to yet another episode of Pre-Market Commentary. Today could be a Monday, which is going to be very volatile. And also, this could be the start of a volatile week. Lots of traders are scared and they're bracing for huge volatility. And in my experience, volatility can be our friend. We should make it as our friend rather than get scared by it. This is, if you do that, by and large, you will win, especially if it's a trending market. Today, we are trending market. Today, we are in a trending market, which is on the bullish side. We've had so many negative events over the last 6 months. Yet the market is trading today at the eighth highest level ever. Nifty only 8 times or only 7 times has it gone above the previous high which we saw recently, and the all-time high was in on 26 September 2024. So you will see something like this happening. The bulls will get hammered this way, that way, but if they survive, I think it will be they should survive so that they can be profitable. An inkling of what the kind of volatility we can see this week. We saw it on Friday. Suddenly the market fell, and then finally it closed higher than the open. Closing higher than the open means the bulls were stronger. It's also a green candle with a reasonably long tail. So what we need to know today is what we are seeing here. If you see the 9 and 20-day moving averages generally act as a support. The red one is the 9-day moving average. This is a daily chart of Nifty. The blue one is the 20 EMA. So if you see this is the high last year, and then it subsequently fell, and then now we have crossed the 9 and 20 significantly, and now it is coming to rest on 9 EMA on Friday, and that is when it has bounced back. It is quite possible we may see it going to 20 EMA, but that is expected in a bullish market. So one should be prepared for that and only be looking at being calm and trying to take a positive stance on the market. So on Friday, both FIIs and DIIs sold, yet the market went up. You can observe it closed at 25,461, which is about 0.22% higher. So on a day when both FIIs and DIIs sold, the smart money bought. If you look at 1 week, FIIs have been selling 5,207 crores last week. And if you take a month data, FIs have bought about 7,100 crores. 3 months data, 26,473 crores. This is after 2 years, we are seeing 4-month consecutive FII buying. The last time we saw was in 23 April. So we are on a good wicket. We are having so many negative events, negative emotions, but the smart money is buying. If you look at 6 months, this year has been a washout for as far as FI investments are concerned. They have sold about lakh and 23,000 crores. Year to date, they have sold lakh and 28,000 crores. And if you take on a 52-week basis, they have sold a humongous 3 lakh 10,000 crores. Yet we are at these levels. So what does it say? It says that we are in a strong bullish phase, and every decline is an invitation to buy. So there is some interesting data from Jeffries on the Jane Street. Important thing you should look at is the last paragraph, which talks of exchange data shows FPIs form, the foreign portfolio investors form 3 to 8% of equity derivatives turnover, and proprietary traders form 60 to 65, from individuals. So which means about 72% is handled by FIIs and the proprietary traders. Proprietary traders need not be FIIs. So you have about more than 30% being handled by retail traders, individuals. So it is not that only some Jane Street or XYZ is manipulating the market. Everybody is there in the market to make money. So your trading techniques, so long as they're not illegal, should not be up for any questioning. In my opinion, I still stick to my stand based on information available in the public domain from SEBI. The machinations or the trades done by Jane Street, I think, do not seem illegal unless SEBI is having something which we do not know at this point of time. Friday was a holiday in US, so nothing much you can would have expected from the European markets. European markets, CAC and DAX both fell because there was this fear of the tariff, letters being sent today. So Nikkei opened flat, but it's in the negative territory. Shanghai is up, Singapore is up, Hang Seng is down. So it is a very mixed, volatile market. So the S&P futures are down by 0.5%. Dollar index is trading at below 97. 10-year bond yield is stuck at 4.3. It is trading between 4.2 to 4.5. So somewhere, it is stuck at the lower end. Brent crude, because the OPEC decided to increase their output, is now trading below 68. Gold spot is down at slightly at 3,300, far away from the highs. I've been mildly bearish on gold for the next few months. I'm more bullish on silver and copper. Silver is doing well. So, what are the stocks to watch? Godrej Consumer Products has come up with some good results. Chemical sector, Niti Aayog is talking of some incentives there. So, that is what will be positive. Incidentally, chemical sector has been doing very badly. So, there are certain stocks in chemicals. We have bought, for instance, Tata Chemicals. We bought Copran. So we are playing the chemical sector through these two stocks. Then Cochin Shipyard has got an order. So anyway, it is in focus. So that should be doing well. OPEC production hike will mean the refineries, upstream refineries, and will boost the refineries, and the upstream oil players will be under pressure. Tata Power AGM is there, and Jubilant Food Works is reasonably good growth. On the negative side, Dabur India has reported not so good results. I've been bearish on FMCG. I think Dabur will be under pressure. Dream Folks, I think it is going to face an untimely death, I would say, because the forces are so big that finally Dream Folks will really lose revenue. So the rats are sinking, running from the sinking ship. That is why you saw the mutual fund selling, because they would have all sold Dream Folks. IndusInd Bank, they have not reported any good numbers, and also it's been downgraded, but it may steady itself at some levels slightly lower. So, in conclusion, I would say I am doing what I'm doing is keeping calm and carrying on and trying to take profits wherever it is possible and trying to put money wherever it is possible. For instance, when it is down, put money and take profits only at the higher level. So we know we are in volatile times. When we are prepared for volatile times, we generally should be having a strategy of buying the dip and riding the volatility. So whatever you do today, I hope it is successful. Thank you for joining me.